Welcome back to Indianomics. Before the break, we were discussing the triggers for this rather long period, 24 months of double-digit consumer price index. But why has this not generated or not thrown up strong political protest even in pockets in India? Professor Yadav, that really is the question to you. Mehengai has always been a serious political issue. We know that governments have fallen because of the price of onions. Now, why is it that despite 2 years, we have not seen any serious unrest from even the rural areas?
Now, let's distinguish between social unrest and organized political protest. We have deep disquiet, and I think it's too early to think that we've developed inflation tolerance. Let's hold our horses for the time being. What we don't see is organized political protest which can work on the government. Let's notice some basics, and these are things which we mustn't forget despite these 2 years. One, we are one of the most inflation-sensitive countries in the world. Even when inflation measured by economists is 2 or 3%, go to people, ask any opinion poll, what is the biggest problem of the country? And the answer is Mehengai. So, Mehengai matters. It has had political repercussions. It may still have. We haven't seen it as yet, but I would not draw so much conclusions about the economy having changed or people's fundamental orientation towards inflation having changed. What may have changed is the structure of politics, of political possibilities of organizing, which we should get into.
Let me give a counter which usually economists give us, that there has been a substantial amount of flow of funds to rural areas in the past 2 or 3 years. The 40,000 crore or more that has been assigned to NREGA, a substantial part of that has gone in the form of wages to the rural unemployed. In the last year or so, 2008-9, the expenditure on Pradhan Mantri Gran Sadak Yojana was also substantial. Would all this have led to some amelioration or moderation of the ability of the rural poor to withstand prices? Is not that an argument?
Well, I'm happy to hear that economists finally do think that things like NREGA have done some good to rural India, because a few years ago there were very few economists who were willing to concede that. I think it is true that some money has gone to rural poor, some amelioration may have taken place. But what we do know from all over the world, and once again the evidence in the case of India is still very poor, the connection between inflation and politics research is very poor. But what we know from the rest of the world is that what matters is not absolute deprivation or its amelioration. What matters is relative deprivation, relative to your neighbors, relative to your own past, relative to your expectation. And that is important, and that's why I would still maintain that despite some relief that things like NREGA may have brought, it may still be too early to think that we have reached a stage where this inflation may be tolerated. Let's wait for the next round of elections, because what may have happened is that social unrest does not get articulated on the streets. There are more organized expressions now, and occasions like election provide one opportunity.
Okay. Well, Professor Yadav, what is your study of urban unrest? We have seen fairly important political mobilizers like the MNS in Maharashtra who have been able to tap the urban youth. But even over here, we see only cosmetic protests.
You're right. I mean, it should hit the urban poor much more, because they are more in a monetized economy, and every inflation is bound to hurt them more. What we don't see, again, is organized political expression. Lata, I would maintain that we shouldn't draw too early conclusions. You would have thought that displacement should have become an issue in this country 10 years ago. And in all fairness, Nandigram was not the worst case of displacement, but somehow that became the issue. So the logic of politics is somewhat different from the logic of economy. It's not that you have this much rise in prices and you have that much decline in demand. Suddenly, at some occasion, for reasons which are not entirely clear to us, things come together and they fuse on an issue which you and I might later say was somewhat less of an issue, when we might wonder why, when it was at its peak, it didn't happen, and why, when it was actually somewhat low, it did happen. But that's politics for you. This can very much happen, but I think there are 2 or 3 forces which are now blocking it more than before. And I would really submit that the answer lies in the logic of politics. One, there is much greater fragmentation of pro-poor politics than was the case 10 or 15 years ago, and was certainly the case in the 60s when food riots took place. Second, there is much greater co-option. I mean, after all the major political parties are the establishment somewhere or the other in the country, and everyone has vested interest in not rocking the boat. And there is also much greater mediatization of our politics. So issues become issues only when media brings them to the front pages. And I wish more programs of this sort were to take place at 9 o'clock in the normal news shows. This is really what's happening. It can still happen. Governments have fallen on inflation issues. This country remains very sensitive on inflation, and I would say this continues to be, at the moment, the biggest challenge for UPA too. It can become a very important issue, and we might be back in this studio in a few months' time, wondering why it happened on this silly minor issue.
Well, I may not entirely be unhappy if the boat is rocked for a genuine reason like this. But Dr. Chaudhary, if we take Samiran's argument forward, and if per capita income grows at the pace that it has grown in the last 4 years, for instance, as he says, from $500 in 2004 to, a little over $1,000 in 2009, and if we are able to maintain this pace of growth, then will we be leading to serious, a new normal in inflation, because a lot of infrastructure constraints have not yet been tackled?
I don't subscribe to this new, within quotations, normal for inflation. I think our policy still feels that we should stabilize prices between 4 to 5% annual inflation over the year, and I do not feel any reason that this should be subject to any kind of a revision. For a couple of reasons. One is that 4 to 5% is still higher than what most other countries experience, including our neighbors in Asia. If we have higher inflation, we'd actually be becoming less and less competitive unless we devalue the currency, and that's not a very nice thing to do. So keeping in mind all of these factors, if you want to sustain high growth, we have to achieve price stability and over a period of time actually lower those inflation rates. So the high normal thing I do not at all buy.
Okay. Well, Samiran, let me toss this to you. I'm not pretty convinced that, we will be able to rein in inflation below the 5% mark, or even bring it down to 4%, as the Reserve Bank has been repeatedly touting. For one, perhaps the global, great moderation is behind us. And more importantly, there will be supply constraints. What is your own gut? Do you think that reining in inflation is going to be possible, given the pressures of demand that we see?
There are two issues I would like to highlight. One is that at least near term, most of the world is going to go through a deflationary phase or very low inflation phase. So given that about 1/4 of our WPI is probably imported inflation, we might see a moderation coming through that channel into WPI in the very near term of next 2 to 3 years. But the more important part to me is productivity growth. We are having income growth, but are we having enough productivity growth? We had a huge productivity boom in between the 2003 to 2007 period, and that probably cushioned the impact of the per capita income rise. Now, if we are going to have a similar productivity growth going forward from here, we would probably still be able to rein in inflation. And that productivity growth, in my view, would likely to come from infrastructure development and easing of supply side bottlenecks. If that happens, then it's possible to rein in inflation. If that does not happen, then it's going to be a challenging task.
But gentlemen, thank you very much for joining us. We are leaving this discussion a bit inconclusively, with more questions than answers. We are yet unsure whether the transfer of resources to the poor has been sufficient to stomach inflation. We are yet unsure whether this accelerated pace of growth of per capita income in India will not create new inflation levels or a new normal in terms of inflation. A lot remains to be seen in the next few years. Thanks for joining me. After this break, we are going to come back to the banking sector. We're going to check out why are banking stocks racing to the top in the stock markets, and what was so good about the banking results in the first quarter. After this break.